This week, Ben and I are going to dive into the updated USDA numbers recapping the 2024 year. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing great. How are you today, Will?
I'm pretty happy. This is going to sound a little weird being I grew up in Missouri, from Missouri. Actually a Bills fan, so they got the W today. So happy about that. On to next round of the playoffs. But Chiefs are off this week with the bye, but I guess they'll have Houston coming up next round. So
Yeah, it's exciting times.
exciting times. Talking about other exciting times, we have some price increases in the market, mostly kind of higher and lower across the board. Giving a quick rundown here. March 25 corn up 13 cents at 470. December 2025 corn up 5 cents at 450. March soybeans up 28 cents at 1025. November beans up 18 cents at 1031. Soybean oil on a cents per pound basis for March up 5.25 cents at 45.58. Soybean meal down $9 a short ton at 298.30. That March wheat contract down 10 cents at 530. March cotton down 1.67 cents at 67.01. And then the West Texas Intermediate crude oil contract up $2.93 at 75.75. So Ben, some gains in corn and soybeans, and then losses on the flip side with wheat and cotton, along with some increased oil prices. So, not a lot of major swings when we look week over week coming into this week, but, kind of more of the same that we've been seeing.
Yeah, so I would sit here and say that after a couple of weeks of really no news, and we were having to scrape the bottom of the barrel here, trying to find stuff to talk about or at least update our estimates, we got a slew of it, last week, a slew of fundamental news from the macroeconomy side. We got an update on jobs and unemployment and hourly wage rates that were very strong. That was a strong point. I think the stock market took it as good news is bad news type of thing, because it likely means that there's not a whole lot of interest rate cuts potentially coming. We also got ag export sales updates on Friday, because Thursday was the day of remembrance for former President Jimmy Carter. So those came out Friday morning. We followed that up a little bit with some more news out of DC related to the 45Z tax credits and some of the finally some guidance, I guess, or proposed guidance for the 45Z tax credits. And then of course the culmination of everything was USDA's January market and supply and demand reports, with a slew of data to pick from. January is known as one of the biggest report days of the year, and it certainly wasn't any surprise or any exception this year.
Well, picking up right there, talking about the updated reports, the updated data from USDA, looking back at the 2024 year. So we saw year over year an increase in, soybean production, definitely a key there. But a lot of these yields came in below some of the stronger estimates. So maybe, slightly bullish factor there potentially for the markets. So Ben, how did you see this report digested? Were there any big shocks to you as you kind of sat back and saw the numbers come in?
Well, it was a very bullish report from a corn and soybean standpoint. I don't think there's any question about that. Both the corn and soybean yields came in below all expectations, so very bullish to the market. For corn, we came in at 179.3 bushels the acre. That's down from 183.1 that was estimated back in November. So a 3.8 bushel per acre drop in that corn yield. The story was largely the same on the soybean side. Soybean yields came in at 50.7, so just below 51 bushels an acre. That was down a full bushel from the November report. We look at where this came across the Midwest for both corn and soybeans. A lot of yield reductions across the board, anywhere from 1 to 3 bushels an acre on the corn side, and 1 to 9 bushels an acre, or excuse me, 11 bushels an acre on the corn side. And it was just a very, very bullish report because of the large reduction in the yield estimates.
Yeah. Well, and it was one of those reports, just kind of monitoring Twitter and or X, I should say, and kind of the response that I saw some, a number of producers on there, maybe, somewhat pleased that, having a bullish factor come into the market, but also some grumbling on, why such a shift at this point. But, USDA does go back and kind of recomb those numbers and try to, click it in to make the picture make sense looking back into review. But Ben, do you kind of see, looking forward, I guess, what's the next thing that could springboard maybe some bullish pressure into the corn and soybean markets, especially because even with that bullish factor, we're not too highly above where we were maybe a week ago, looking at where we sit today.
Sure. So I'll give you two things. I think at least on the corn side that I think could be a bullish factor coming. I talked about my first, my biggest surprise in the USDA reports Friday was the reduction in the yields. I think everybody was surprised by that. My second largest surprise came that they reduced corn exports 25 million bushels. The reason I say that's a surprise is because at least from some of my estimates, we could see we could have seen another 100 million bushel increase to that corn export number. So now that we're reduced 25 million, I would argue that we're 125 million at least short of where we could be. And so I think that's a possibility that's sitting out there, at least for the corn market, to see a little bit more bullish fundamentals. The second thing that I think is hanging out there that's maybe more of a mixed bag is we didn't see any adjustments to the South American corn and soybean production estimates. USDA left all those the same. Of course, on the soybean side, we've been seeing that crop get bigger, and a lot of the estimates, or at least for Brazil, are now over 170 million metric tons. USDA chose to stay at 169 million metric tons. But the second bullet thing that I think plays here is we could see a reduction in the Argentina corn and soybean crop. It's very dry down there. The weather forecast for the next 10 days is certainly suggesting a continuation of drought pressure and stress on that crop. So, potentially a little bit more, bullish fodder from the Argentina corn and soybean crop
Yeah.
specifically, not the whole continent, but those three combined.
Well, Ben, then looking at how this report kind of sets the tone for the 2025 season, at least early on, we're dropping down the production numbers from 2024. So looking at maybe different or lowering numbers on the books carrying over into the new year. So does this maybe create a sentiment to where prices could be higher looking at some of these export numbers, moving down the line? Because we did also see, like you said, that decreased demand. So we're kind of hungry right now looking at, yeah, we had lower production, but also lower demand. So that kind of washes each other out. So moving forward into 2025, what's your finger on the pulse of the picture as we look at early season numbers?
Well, I think the reductions in the production estimates are certainly, helpful. I guess if you
Mhm.
want higher prices and bullish prices, it at least provides an opportunity that if we get a weather scare still in South America yet this year, or even this summer in the United States, that creates an opportunity for a pretty significant rally in these markets. Probably more so for corn than soybeans. There's still a lot of soybeans on the global balance sheet. The world is still well supplied with soybeans given the large crop that we are seeing start to come out of the field in Brazil. So that's how I guess I see it. Is it allows us to see maybe a stronger reaction if we do see some drought. On the corn soybean side, at least. The wheat side, we haven't talked about winter wheat acres, but the winter wheat acres actually were kind of bearish. It was a bearish report for winter wheat, but wheat was kind of pulled up along the way with the higher corn and soybean price estimate or price movement.
Yep, yep. Well, Ben, looking forward into the rest of this week, what should farmers and ranchers be paying attention to that could shift the markets after we had these updated numbers?
Yeah, so a quieter week after a really busy week. But Wednesday, we do get the January NOPA report. Also, Wednesday, we get the Consumer Price Index for December update. So those are in addition to our normal reports. And then just as a reminder, on Monday, January 20th, markets and other types of news releases will be impacted by the Martin Luther King Jr. Day of Remembrance. So
Yep.
just a reminder that that'll be happening next Monday.
Yep. All right. Well, looking forward. If viewers and listeners have more they'd like to learn about from us, you can check us out and our sister program, the weekly livestock market update at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.